Stocks fell Friday amid the ongoing debt talks in Washington. Stocks had risen over the past several sessions as the debt debate appeared to be making progress. However, as of this recording, talks have apparently hit an impasse. But for the week, the major averages closed higher. The Nasdaq and the S&P 500 had their best week since March and their highest weekly close since August 2022. So while the talks have stalled, investors are digesting the better-than-feared first quarter earnings results. And in other news, the State Department is now offering therapy to misgendered employees after a system-wide glitch accidentally added pronouns to the from line on employee email addresses. But the most progressive government in history has come to the rescue, and anyone who feels hurt or upset can receive counseling. It's not clear at this time whether counseling will be impacted by the debt ceiling talks. But some advice: if you are hurt or upset at being misgendered, the stock market is not the place for you. And while talking about debt, this is the U.S. debt clock, and you can reach it at usdebtclock.org. Here in the upper left, you can see that the current national debt as of this recording is over $31 trillion, going to be $32 trillion shortly. Now, also at this point here, you can see that the interest on the debt, again, that is the interest only on the debt, stands at over $570 billion per year. And now we're looking at the charts, and this is a 3-year weekly chart on the spiders, the SPY, and as you can see, the close on Friday was 418.62. We'll take a little bit different perspective with the 3-year on this. And what I want to show you again is the channel. First, the bottom channel line moving up through like that. That's not a very straight line, but you get the idea. And then the top channel line moving up through like that. Same thing. Now, we have come up to this point here, and it was somewhat of a struggle. We popped up here on the last few days, and I think that did perhaps slightly exceed, say, this level we had here. So we are making progress, but it's very slow and relatively weak. We need to continue on up through here. Now, I've gone through some other charts, and without showing those charts to you, my thoughts are this. This is my hypothesis that whether we continue on up or if we roll over at this point here and head on down, I don't think we're going to be going much below this bottom trend line. I no longer think we're going to test that low here back in October of 2022. Again, I think we're going to probably come and test this low on the bottom channel line. We might even go down to where we had that low there, or perhaps even this, but I think that's about the extent. That is my hypothesis. I think that is the probability. It's possible we can go down here, but I think very unlikely. I think we're going to meander our ways for a while until the debt talks succeed one way or the other. If they fail, that is perhaps the possibility that we could go and touch this here. But I don't think that's the probability once again. Let's go ahead and take a look at the rest of the oscillators. Volume is looking fine. Here, the MACD, you can see that we're struggling on our way up, but we definitely have crossed up and over that zero line a couple of months ago. Slight acceleration, but it looks like it is weakening, and you can see that once we get to the histogram right here, and the histogram, once again, the top at this point to the current level seems to be declining, and I think that essentially signals the weakness of the market Moving on down into the price rate of change, you also see a little bit of weakness here too. Going on down, we're near that zero line. We might pop below that, but I think we'll probably stay above this level here, even if we do go down below. I don't think we're going to revisit these lower levels. Into the relative strength index, we're at a moderate 65.41. Again, I'd like to see us move higher. It is looking like it wants to knock at that upper trend line, and we need to knock on that door and then head on up into that overbought territory up here for the market to really move. But in a favorable sign, you can see that these bottoms are stepping up as we move along in the calendar. Into the next oscillator, the stochastics, this is looking pretty decent. We have just gone into that overbought territory with both the fast line and the slow line here, so things are looking better. But I think it is also showing up a little peaked, maybe a little bit of weakness here with this move down, and then this move back up isn't really showing a lot of strength, so things may be waning. Moving here to the Williams, pretty much the same thing. You can see that we topped there. We did a sawtooth down here, but we're coming back up. We might do a few more sawtooths and perhaps maybe roll back down under that -20 and head down to that midline. But I think that is only mild weakness. I don't think it's going to show a crash in the market. I don't think we're going to experience any sort of deep dive back down in the price chart. So let's take a look at it one more time, and I'll just reiterate again. I think the probability is we'll come down to this trend line sooner or later. I don't think we'll go much below. If we do, we'll hit this level here, perhaps this level here. Again, I do not think that this is the probability retesting that October low. So plan your investing schedule with patience and prudence, perhaps average in. And for today, that's ChewDog Charts. Thank you.